Okay, welcome everyone. We'll start our second lesson, lesson 2. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email on my email address. So in this lesson, we'll go through our LO2 learning outcomes to be able to prepare and interpret a statement of cash flow. Last lesson, we discussed how many types of statement we can prepare. We discussed about accounting concepts, and we discussed about why we have to prepare the business all these financial statements, which those are the very crucial for different businesses to make the decision based on the financial information. So today lesson we'll go through our LO2. Before starting our lesson, we'll recap what we learned during our last lesson, and we'll check what we're supposed to learn today lesson as well. So in last lesson we cover LO1, understand the regulatory framework for financial reporting, where we discuss about different international accounting standard. I mentioned you IAS 1, International Accounting Standard 1, which help to prepare and presentation of financial statement. We discuss different types of statement of comprehensive income, which are also known as a profit and loss. Second statement, we discuss statement of financial position, also known as a balance sheet. Then we discuss about different accounting concept. We discuss about accrual basis, which is also known as a matching concept. Each income and expenditures of particular year should be recorded in that year, not on the basis of the cash when we receive. That's what we discussed in during last lesson. So we discuss about materiality is mean significant. We discuss about qualitative characteristic of financial statement. Prudence we discuss as well. We discuss about comparability, verifiability, understandability, and we discuss about timeline. These are the qualitative characteristic we discussed during our last lesson. We discuss IASB, stand for International Accounting Standard Board. We discuss IFRS is International Financial Reporting Standard. We discuss about UK accounting standards as well, and we discuss various other part of the world, different accounting standards, and why those are accounting standard help us to harmonize and develop a system that will help to understand the user. And we discuss various stakeholders during our last lesson. Today lesson is a lesson 2, which will go through our LO2, be able to prepare and interpret statement of cash flows. So today we'll go through the third statement, which is known as a statement of cash flow. These are also known as a financial statement. Prepare the statement of the cash flow from the given data. I have selected the data and will prepare the statement. Interpret, how we can interpret the statement under the cash flow, where the cash is coming, where the cash is going, how we can improve the cash, under these different heading within the cash flow. Make justified, how we can justify the cash flow is the really good position of the cash flow, because too much cash is the bad, too little cash is the bad. So always we need to look around the business needs, what business needs are, because nowadays, especially think about the coronavirus, you have an asset million worth of, but no one is looking or willing to buy, because a lot of businesses close and it's very difficult to move around as well, to go out and buy the stuff. So in this case, to sustain in a business, cash is a crucial. Cash is the lifeblood always in the business. So we need some cash for emergency purposes, some cash, so we need to be look around those. We'll look around, evaluate the significant information within the, what sort of information is, and how significant, how valuable help, to make the decision. We can look around various company statements like, Next, Marks and Spencer, Morrison, Asda, or any company of your choice. You can find the financial statement. We can evaluate the usefulness of the cash flow. So all this will be focused during our lesson. So today lesson, our inductive content, what we supposed to be explain the purpose of the cash flow. Prepare the cash flow by using indirect methods. Prepare the cash flow notes, which we'll go through and we'll discuss. Analyze the information which is given in the cash flow. So that's all will be focused today lesson. So we'll start. So cash flow, which is known as a statement of cash flow. So statement of the cash flow summarize all the movement cash into and out of a business during the accounting period. Accounting period normally consists of 12 months. This provides the user of the financial statement with the information about the entity ability to generate the cash and the cash equivalent. Cash on hand and demand deposit normally indicate the current account, petty cash, and the bank overdraft. Cash equivalent is a short-term, highly liquid asset. We learn in other subject as well in other unit, and we know the current asset is always most liquid asset. So that's, and the cash flow, inflow and outflow of the cash and cash equivalent, which we'll go through during our lesson. Then we have under the cash flow, we have three major activity under IAS. Okay, IAS 7. International Accounting Standard 7 is about the cash flow. We have three different types of activity. Is called operating activity, investing activity, and financing. So operating is our normal business, our core business. Think about Morrison, Asda, or any other supermarket. Core business to buy the consumer good and sell the consumer good. That's the core business. Think about the Unilever core business. So consumer goods. So these are their operating activity. If they have a spare cash, they can invest money somewhere and buy different types of plant, machinery, or non-current asset. That's called investing activity. If they sold, the cash will come in. If they buy, the cash will go out. So is investing activity. Then financing activity is mean you borrow more money from. So if you look the non-current asset last year, non-current liability last year, this year, which indicate the financing activity. If you look around the last year issue shares and this year or during the year, how many shares we issued, all these comes, under the financing activity. If we settle the liability, cash will go out. If you borrow more money, the cash will come in. Okay, so that's what we'll go through. Under IAS 7, we can prepare the cash flow statement by using two methods. It's called indirect method. Recognize profit before tax to the net cash flow from operating activity. More of entity mean organization use this method. Direct method list and the total actual cash flow. So which I'll show you in the next slide. Any question? So next now I'm going to show you now indirect method. We can look around the cash flow format of the statement of cash flow. So first thing is come the reconciliation of the cash flow, which is operating activity. So operating activity is a link with the current asset. Current asset mean the asset which we can use within a year. So first, profit before tax, which is always given in the statement of profit and loss. So you have to pick the figures from that statement. Then we look the adjustments and we add, the finance cost before you minus it in the profit and loss, because the profit is there. You're adding back. Then depreciation. Depreciation is a non-cash expense. Dividend received, because dividend received is not a operating activity, is investing. If you invest money in the shares, you will receive dividend. Gain, if you have a gain on disposal of non-current asset, it's not our normal operating activity, is the investing activity. So that's why we are minus first place, you add it. Increase or decrease in inventory, you need to be, if it's an increase, it means your cash is a stock. If your inventory decrease, it means your cash should be increased, because that's why it's just in time inventory concept is being, and Japanese companies, a lot of, they use the just in time. So decrease in the trade and other receivables, so we can make adjustment there. Increase our payable, will make the adjustment there. Then we have an interest paid, how much interest paid and the tax paid during the year, and the net cash from operating activity. If we're using direct method, we'll say cash from customer, cash from supplier, cash generated, interest paid, tax paid, and we can make it. So indirect, most of company, and the direct method. Next, we look further other activities. So other activities are net cash from operating activities, net cash from. Okay, so first we'll go through the layout and then we'll go actual question we'll do. So net cash from operating activity you have now, we discuss at the top. Now we are looking the investing activity. So under investing and activity, if you have a purchase plant and machinery compared to last year more now, that will be mean is increase and the cash is went out from the business. If you sold the net non-current asset, it means the cash coming in. If you receive interest on your investment, if you deposit money in bank account, you invested in the other company, and that's the is the money coming in as a interest. Dividend, if you're receiving the money coming in on investment, so you can find either is a positive or negative cash in and out under the investing activity. Then we look the financing activity. Financing mean maybe you borrow more money or you paid off your liabilities. So if you issue more shares, the money in. If you increase the bank loan, money in. If you pay the dividend because if we issue the share, the shareholder will get the money from, and then we pay the dividend, will reduce our cash. So what is happen net cash flow? Then we look the net cash flow from operating. Maybe you have a positive, then the investing you have a negative cash flow, maybe financing you have a negative cash flow. Positive minus negative, negative, what year is it? Net positive cash more, then add the opening balance which is always given in the balance sheet, and that will be equal to this year your closing balance. It's mean reconcile and we can see. Anybody any question? Okay, let's we'll go through now actual question. Okay, so I picked the question. We've been given the question. Given the below statement, financial position is limited. We've been given on the 31st March 20x3, and together we need to be prepared is a statement comprehensive income. We've been given the profit and loss. We've been given the non-current asset last year. This year you can look around. Is this last year and this year is increase. Depreciation we've been given. Investment we've been given. We've been given the current asset. We've been given the equity. We are been given all, and then we've been given the statement profit and loss. So we said profit before profit for the year we've been given 131. Before tax we have a profit 177 million, and during the year the property plant was sold. Original value was this, been sold this, and we've been given all the additional information. So what we need to do, we need to prepare. We've been asked to prepare the statement of cash flow. So first, we start with from the operating activity. So start profit from operation, which is given the figure in the statement. If you look there, profit from operation is 197 million. So 197,000. Sorry, it's not million. 197,000. So we look there, and then you've been given the adjustments, depreciation for the year. So if you look depreciation in the profit and loss account, in this the depreciation normally we already minus, that's why we have a profit here after all the meeting the expenses. So we said depreciation is a non-cash expense. First place you minus it, you add it back. Then the profit on the disposal, profit on disposal, we don't have a profit. Basically we have a loss. We minus is first place, we adding it back. Investment income we add it as an income, but now we minus because this is not operating activity. This should go under the investing activity. Inventory increase and decrease. Go back to inventory. Look the last year, this year. Last year was 113. This year we have 132. So inventory went up by 9. So you need to look around the inventory increase. This will be negative effect on the cash. So go back to, you will see there the inventory. We have investment, we have inventory, we have 19 is went out from the business. So we can make even T accounts. Look there, we are making T accounts. Yes, which we'll go through in a minute when we'll see other activities. Okay, anybody any question? Yes, so if you look there, 113 and 132 inventory is increased by 19. Then we look the trade receivable, 92 and 102, so 8 and 2 is 10, is increase in receivable, so will be negative effect on the cash. So you will see the trade receivable increase, it means the cash is stuck in our receivable, cash not increase. Trade payable, yes, trade payable increase mean you borrow more money and it's mean positive effect on the cash flow. So cash used in from operation, then interest paid, we paid interest during the year, 20 million. So how much we paid during the year, we need to look around the last year liability. Tax, look last year and start with the debit balance. It's given liability on the credit side. So you make the T account. So if we look there, we can look around the tax, we can look around all, we'll prepare the T account. Okay. So let's, we'll go through here. Okay. So during year we paid the tax is a 20 million. Yes. And finance cost, which is interest, we paid 20,000 and tax we paid 46 for this year. And we look the other years as well. Okay, so we'll prepare the T accounts. So let's look here. Always look in tax liability. At the start of the year was 41,000. At the end of the year, still we have a balance. This, and during the year, how much we paid, which is given in the profit and loss account, we paid tax 46 million this year. So make the T accounts. So let's, we start with the balance brought down 41 during the year, which is given statement of change in comprehensive income 46. So my tax liability was 87. At the end, I have still outstanding liability to pay 50. So there is the payment, we paid it 37 million. So my 37 million will goes here, the income tax we paid that, that's why the cash balance went down. So net cash from operating, we have a 224,000 is a positive cash flow. Now we look now, we're starting net cash flow from operating activity, then we have a cash flow from investing activity. So we look the last year and this year, what's happened, the non-current assets. So look, last year non-current assets were 490, this year we have 7, so it's went up and we need to consider the depreciation as well. So look, non-current assets, we starting balance brought down 490, we have at the end we have a balance 734. We dispose the asset which is worth of the 52,000, and the difference is we have this side is coming, it means we have bought more non-current asset worth of 296 million. So 296 million we have used the cash. That's cash. Proceed, the asset we disposed of, and the proceed we have a 20,000 proceed. Then we have a interest received, dividend received, we not been given. We have an income from investment 10,000. We have a proceed of investment to subsidiaries, we made the payment, and then we've been given the 62. So then the net cash from investing activity, we have a negative. The cash went out from the business, 296 plus 60 and minus are 20 and 10, because 30 is in and rest, is went out. So net cash is went out from the business, 328 million. Then we'll do the cash from financing activities. Financing mean you borrow the money. So always look here, non-current liability last year, this year, it went up 70,000. If you look there, liability last year, this year is went up. So 590 to 848. So always this will be effect on the cash flow. So look there, So that's proceed from the issue shares is 18 and then the proceed from the long-term loan 70. So total cash in is a positive. So 224 plus 18 minus 328, we have a negative cash flow from all these net increase or decrease is 16,000 is decrease. At the opening, we have a cash balance 29. So negative, positive, there is a net 13. So if you look this 13, your answers can that 13 should be equal to the balance given in our statement of financial position, which is 13. So if this 13 and your cash flow balance is match, yes, it means we are right and our question is 100% right. Anybody any question? Okay. So we'll move. So with this we prepare the statement of cash flow. Okay, next now interpret the performance of the company. So we can look around and we interpret, has the cash increased described period? As the material is increased or decreased, like inventories increase or decrease? Has the entity positive cash flow or the overdraft? Have the inventories and the receivable pay increase and decrease? Is there enough cash and the cover to interest or the tax or the dividend? Is there any capital expenditure, which is mean investment in the non-current asset, that's called capital expenditure? Is the debt is increased? Yes, non-current liability last year. This year we seen 70 million increase in the previous question. Will entity able to pay? Yes, we need to check, and we can look around this. Anybody any questions? So please you can ask me. Okay, that's the way we can interpret. Okay, now I pick the example of one supermarket, which is called Morrison. So please, I copy the link for you, and if you want to read these notes further interpret, you can as well. Okay, let's look now. Hope so you can see this. Yes. Okay, so under the investing activities, if we look last year cash from operating activity, next this year was 712 million, last year was 744. This is went down, which is not a good sign for the business. It should increase. So maybe we not manage the inventory properly, we not manage the trade receivable properly, we not manage the trade payable properly. That's why is net effect. We can go and further we can read note 5.6 to be further investigate in more in details. We can interpret the information. Interest received last year. Next we're looking in investing. Last year interest we received 4 million, now we receive only 1 million. Dividend we received 7 million this year, last year we was 8. So that's decrease in the cash inflow under there. So when what net, the net cash inflow, basically we have a more outflow under the investing. It's not, sometimes people think maybe it's a bad, but if you have a business, you're investing money, you're expanding your stores, you're buying more stores, of course your cash is going out from the business, you're investing in those stores. Then the cash financing, your borrowing activities, we can look around. So if you look there, we have borrow more money went out, we have a less borrow. So last year was the negative 363, the money we used to settle our liability. This year we used 344 millions to settle the liabilities. So then we can look around what happened the net cash inflow are. So this year we have a negative cash flow from these activities. So at the start last year was 1 million positive, this year 63 million we have a negative. So 712, and then you minus 431, you minus 344, your net will come 363. And then you look opening balance, which is given in the statement of financial position, that was opening cash. And this negative, this positive, if you take the difference, this year the cash is 264 million, and the last year the cash was, the net balance at the end of the year was 3. So that's the difference now. So we can say where we been use the cash. So that's we can further interpret. Anybody any question? So in this way we can do the planning, and that will help us, to make the decision for future. Next, we have a 2.3, make the justified recommendation based on the organization statement. So if we look the previous question, the Morrison statement, we can make the decision. Cash from operating activity, we can say it's increased, but it's not increased. If we look here, the operating activity cash went down from 744 to 12. So we need to think about the inventory management system. We need to buy only what we needed. We need to make the negotiation. We need to improve our credit control. So that's, the interest and the tax, we need to look around investing. So if we look investing activity of Morrison, if the cash went out from 380 to 431 million. So there is an increase. If you look the financing, what happened in the financing activity? So which is if the cash went out from the business because we settled the liability, which is it can be positive effect in the following year, but not maybe this year. So cash and cash equivalent, what happened? Net cash increase, decrease. We have negative 63 million, and the previous year 1 million was positive. You will see there this, yes, now is this. So that's meant by, so the way we can say profit and the liquidity. The accounting concept is accrual basis. We learned in the last lesson. We record income and basis, but the cash flow is the real crucial. That's why the cash flow is so cash. Their cash generation and the cash absorption for the period highlighted significant component in the cash flow. So that's facilitate the comparison of the cash flow performance different, provide the information to assist in the assessment of their liquidity, solvency, and the financial adaptability. So statement of the cash flow is important for the user and account because they help, the user to assess the liquidity and the solvency, how the business is liquidate, how much the cash they have, and how much, and we can make it. Anybody, any question here? So please, you can ask. Cash flow means the survival. If you no cash, no business. Then we have evaluate the significance of information within the cash flow. Cash flow is the vital survival of the company, both long term and the short term. To reflect this, one of the key measures of the health and the business is the solvency and the liquidity. So to ensure the effective balance management, most consider the inventory production, storage cycle, all this, we need to look around the keeping inventory. If you have a too much inventory, your stock. So that's why the just-in-time inventory earlier I said as well. So it's very important. So evaluate the significant information. So in the cash flow, there are the significant information. So we said we can make the decision. If we look here, the operating, what's happened? Maybe your credit policies in change and your sales increase, but what effect on your net cash? You need to look around. Maybe you want to expand your business, your cash is out and your cash is running low. So that put your business at risk. So that will also help it to ensure the effective balance management, consider inventory production storage. So that's we need to advantages and limitations. So we can look around the cash alert user liquid problem. We can show all well. We can look around the limitation. Cash balances can be manipulated. Sometime, we can look around all this. So please, we need to be follow the advantages and disadvantages and limitation of the cash flow. But it's always is good to be cash flow. So difference between the profit and the profit can be credit sale, but the cash flow is actually represent, the strong cash position always good and the less risky for the business. But too much cash you're not investing, which is less you're generating profit in future as well. So we need a reasonable cash balance. Okay, I copied the link for you for further reading. Please, you can copy this and you can read, and you can see the cash flows and the example, and you can evaluate further and justify. And I copied the link, to do a quiz on the cash flow. Please just, play with it. If you have any question in a meanwhile, and drop me email. Anybody, any question? Okay. Okay, so let's see now. So please make sure you go through these and go through examples. What I'll do, I'll upload, more questions for you and go through those questions. If you have any questions, please drop me email, and my email address anjum@ukversity.co.uk. So if you today lesson we learn about how to prepare the cash flow, what is important of cash flow, what sort of the information shows in the cash flow. What is the cash flow? Cash flow we prepare under IAS 7, International Accounting Standard 7. And the cash flow have how many major parts? Operating activities, investing activities, and financing activities. So these are the three activities where we can look around my regular business. Is it how much cash generate? My investing, if we invest, is it increase or decrease the cash flow under the investing? And my financing, as it I borrow more money, the positive effect will be on the cash flow. But in the long run, we have to pay interest as well. So interest can be expense for the business. So we need to look around those as well. So always we need to be look around, and we need to monitor the cash flow. So please just focus on these, and I hope speak you all during the next lesson. So please, if you're just listening, carry on and do more questions. Follow the links which I copied on within these slides, and develop your understanding as well further on cash flow statement, which is a quite crucial statement for businesses. So today lesson we learn about all about the cash flow, which is under IAS 7. We prepare International Accounting Standard 7. Thanks for attending, and again is my email address. If you need me, drop me email. Thank you. Bye bye.